What a day. So I want to
Oh
introduce you,
my
Anka. I
God.
want to tell everyone about you. I'm going to let you tell everyone about you, but I met you a year or so ago in person, but I've been following you on Twitter for a very long time. Can you give everyone just a kind of a brief rundown of who you are and when you got involved in the market?
Absolutely. We've been stalking each other for quite some time now.
Yes, agreed.
Okay. Hello, everyone. What a time to be alive and what a time to be trading. We have the best opportunity in the world. We're sitting at home, in our offices, or anywhere you are in the world, and you have the luxury to trade from your computer. You have the luxury to have your computer as your personal ATM. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. And Jeremy invited me here today. I don't even know what it's about. So okay, so
I'm
I
just
just know, we just talked briefly. Okay, it's an interview, but if it's market related, like we really need to know what it's about. It's about the market. I've been trading for 17 years. I know it's a long, long time. And I have been a professional independent trader for 17 years. My specialty is day trading futures in the first 2 hours of the New York trading session and swing trading stocks. I don't do options. I've been also I have prior institutional experience coming from investment banking, and that was 10 years prior to becoming a professional independent trader.
mm,
And that's pretty much it. I mean, in a nutshell.
love it. Love it. Well, thank you for the background. So 17 years. That's amazing. How'd you get started? What was your first trade?
I was working for an investment company, and we were running hedge funds, different hedge funds, and I was doing, all the work. It was a boutique firm, and it was specialized only in high net worth, handling only high net worth clientele. I really wanted to do the same for my account. So I kind of wanted to carbon copy, and it was so exciting, working on exploring technical charts, putting together, trades for our clients and all that. And I decided, one day it came to me and I said, you know what, I don't want to do this anymore. I want to do it, I don't want to do it, for someone else. I want to do it for myself. So in about a month, I went back and forth, and within a month, I decided, you know what, I'm going to call it quits. I'm going to resign, and I'm going to start my day trading business. And I think one of the biggest advantage was that I treated from the start as a business. And I went into day trading. Now, don't forget that I'm coming with those 10 plus years in investment banking. So I'm coming from the institutional side from investing, and not even in swing trading. So we were literally investors into the market. And those were the years definitely when, everything was a pretty slow growth, but it was still a growth. So there were, I cannot recall volatility spikes like we're having right now. Like
Yeah,
literally when you're looking in S&P, like, the 10 points is now the 100 points.
sure.
And it's just incredible. So long story short, I decided to create my own day trading business. I literally treated it as a business. So I had a plan, and I attended a lot of courses because I wanted it to get into day trading more. And that short-term aspect of it, it was very attractive to me because let's face it, when you're investing, you're basically taking your funds and you're blocking them for long periods of times. But not having a paycheck every month, I needed an income producing style of trading, and to me day trading was it. So I attended a lot of classes, anything that I could grab my hands on. And I learned a lot, like everybody in here. And I think that's a great learning experience. And when I first started, I have to say, you know, there were not many trading rooms around. Literally, there were not many trading rooms around. And it was kind of like a lonely kind of place. So like you guys, I found a home, and I was, you know, very excited to be part of a community, because being part of a community, especially when you're trading, is awesome. Because here's the thing, someone posts, let's say, a ticker symbol, someone else is posting some news. So you can't really like be your like one person show. So there's a lot of contribution that goes into a trading room. So that makes it so special. Plus you could use it as a scanner. So that's amazing. You know, even if you're a more advanced trader, you know, Jeremy comes with trading ideas, say, hey, I'm trading LUV, or I'm trading the SPX, or I'm trading this right now. You probably are trading, I don't know, Broadcom or something else. And then, you know, Jeremy comes on and says, hey, I'm trading this. So it automatically widens up your trading universe. And I think this is so amazing for a trader.
Heck yeah. Well, tell us a little bit about your EMoney's trading strat. Is that what you mentioned? Futures? Sorry. So what is it you trade?
Definitely. First off, I just want to say that I love looking at your charts, because they're really nice and clean. And this is the only way you should go, like nice, clean charts. I don't like tons of indicators. And probably Jeremy, I mean, I know we talked about trading, but you're a true believer in price action, right?
I try to be, yes.
Exactly. Exactly. Right. Support, resistance, you know, basic concepts that are working every single time. Nobody can take away these basic technical analysis concepts. So my strategy is based on the first 2 hours of the morning session. Well, because I do trade futures, I have a little bit of upper hand, because I know what's happening in the overnight trading session. And I do have some levels that I can base my trades on right off the open. I like to typically take trades really at the beginning of the trading session between 9:35 and 9:45. And then if I don't have anything that is setting up between this time frame, I like to wait until about 10:30. That is my prime time trigger time, because by then, you know, all the fleecing is pretty much resolved. And from that point forward, if you're having a trend day, you could definitely have a continuation higher from that point on, or a continuation lower if that is the downtrend. I typically love to trade the smaller time frames. And to me, a smaller time frame is basically 515 zip code, because that's bringing you, for me, that's bringing me a little bit more clarity. Sometimes I like to zoom in on the 1 and 2 minute, and that's right off the open. If I have some trades that are developing right at the open, I like to look at that gauge and kind of like use that 10 to 15 minute time frame to have some aggressive cluster trades. So basically what I'm looking at is that is the high and the low of that 930 to 945 range. And if it breaks above, I'm going to take it long. If it breaks below, I'm going to take it short. But obviously that in a context of the trend, right? Obviously, it have to be in the context of a trend. I also correlate my trades with a 4 hour and with a 1 hour chart, and I love using that for confirmation. So that keeps me out of trouble, because if I see a setup like a pullback buy or a breakout that is happening on a smaller time frames, like either 1, 2, 5, or even 15, but if it goes against the hourly, so if the hourly chart is pointing out as being neutral with an inside bar, or it's trading very close to the low of the prior hour range, then I'm not really excited about taking that buy setup or taking that breakout, because it has a much higher odds of failing from that point lower. So, and that is typically for the open. And like I said, for the 10:30, that is my prime time trigger time. I'm definitely looking for 15-minute buys off support zones. The more support zones, the better. I use very simple moving averages, very simple indicators. I use the 20 simple moving average, I use the 50 simple moving average, and I use the 10 exponential moving average. I've always been using them like forever since I started day trading 17 years ago.
Yeah.
And I find them useful because they offer another layer of dynamic, either support or resistance. Price above the 20, and especially on a 15-minute time frame, then price is more poised for a continuation higher. And if the price may be sliding below the moving average, then the price may be poised for a continuation lower.
Yeah, and you mentioned you mostly focus on the first 2 hours of the New York Open. Do you ever trade night, or what are your rules for that?
If the setup is there, and actually yesterday was a perfect example because yesterday we pounded a lot Russell. Russell had relative weakness, and we saw a setup that was developing close to my, I would say, exit time from the market, but it was still looking relatively weak compared to the rest of the indices, the S&P, NASDAQ, and Dow. So because I saw that relative strength and I saw that really massive price void below the current support that it was sitting on, I just, had to get in. So I typically don't like to initiate trades, beyond, and especially the futures indices. Stocks are totally different. I would take stocks anytime. But like for futures indices, you're going into doldrums. The London session is closing at 11:30. The volume is drying out. So they don't have a really good dynamic. But yesterday they did. So there are days and days. Yesterday they did. We took a setup. It was a breakdown. It was a simple breakdown. So simple, very, very simple strategies.
Right.
And in fact, trading is simple, and I could see it from Jeremy. I could see it from your charts. Exactly. This is exactly my style of trading as well. Like simple charts, simple support, simple resistance, breaks above your bullish, below your bearish, but depending on the context. So
Sure.
we took risk short yesterday. It had really a very nice transition into target. And then we cooled off. We typically I closed the room, and then I saw some opportunities that were coming into the PM session. I saw really weak oil, and with oil, I was like double biased because I was watching the 4-hour chart. When I trade oil or gold, typically for mini swings or even longer term swings, I love to use the 4-hour chart. 4-hour pullback buy, or the 4-hour breakout or breakdown, or 4-hour sell, they're really, really strong, and you're getting that velocity to target and to massive targets, either to the upside or to the downside. So yesterday, oil was doing one of those that it was literally clustering at a specific support zone that we were watching. And then I mentioned that it was doing one of those interesting sandwiches. And then I said bullish above or bearish below. I mean, either or, because it's sitting in an oversold area. But remember, any kind of asset can stay in oversold or overbought area for a relatively long period of time. I mean, notice how long the market has been into overbought conditions. It was like overbought. Yeah, but it's still going higher because it still had projections for higher. Same thing with the bear market or the market that is downtrending. As long as you're still having support zones underneath that have a pretty wide void, the market is going to get sucked into the area of least resistance or least support. Yeah. So we took short oil. We have a private Twitter feed for our members. And if there are any trades that are happening outside of the trading room hours, that's where we notify them. And we had massive profits on that as well. I mean, and today we didn't do anything. Like literally today, nothing, absolutely nothing. We were just sitting on our hands. I closed the trading room at 12 o'clock. So we didn't catch this pop into the market, but it was very interesting to note that this could have been an area for a 15-minute buy up or a 15-minute short under.
Sure, which makes sense. So tell me a little bit about, Anka, how would you go in and play the risk profile on something like crude? So if you're playing the 4-hour chart, just as an example,
Yes.
this is, almost $1, give or take, or almost a
Yes.
full point. So are you doing hard stops, mental stops, trailing stops? Do you do one
Wow, I
contract?
love that. Yes. Okay, so here's what I'm applying and what I find that is working right now, and especially since the market structure has changed a little bit since
Mm-hmm.
2018.
Mm-hmm.
Okay, so first off, when I'm trading the 4-hour chart, and just remember that even smaller accounts can participate in, let's say, like in a trade like oil, like $1 stop in oil is about $1,000, right? Don't forget that oil has a mini. Now, with the mini, smaller trading account sizes can trade using minis, which is half the size. So you don't have to necessarily risk that whole $1,000, okay, for this specific commodity. Because remember, because of the ranges, and even in the futures indices, you saw that the ranges are really, really high. Typically, a lot of traders lose money in this kind of market environment in futures, because futures and forex market are the two markets where traders blow up their accounts and faster than stock trading, faster than stock traders.
Right.
Yeah. So on a structure like that, I look at that little doji right there, and you can see that little doji exactly where you have that purple, pink line, exactly where you have the pink line.
Yep.
Exactly. It's more or less into a prior area of resistance. So right now it's trying to anchor into exactly that doji right there. Okay. So I love to trade with dojis. And a doji to me is like indecision point. It's like bulls and bears come together at the negotiating table and they need to reach a decision. It's either going to be bullish above or bearish below. And depending on the context, right? So in this example, we're looking at the left-hand side, right? So we're looking at the left-hand side, and we're seeing that pretty much that doji is sitting into that prior cluster. You see it from the open right there?
Mm-hmm.
It's sitting into that cluster. Exactly, that one right there. Exactly. And to the left a little bit. So into that peak, we had that big surge to the upside, and then the price subsided a little bit lower. It anchored. And what do you notice on this chart? You have the very low from the beginning of the trading session. Then you have a higher low, and then you have another higher low going into the doji where Jeremy had that pink line. And then you have the doji, right? So you wait. I didn't go in on the first one, and then I waited. And then you see the second doji, which that doesn't have a filled candle, that is white. And that was, to me, the signal that we should go short under it and place the stop above and let it slide below. So it was a really nice trade. I was not really expecting the massive follow through that we had, and we actually closed the trade last night at 10:30. Okay,
Gotcha.
last night at 10:30, it came exactly into a fib, because this area that we have right now in oil is actually the 61.8 fib. That is sitting right there. So that's why it's finding its support right here, and it's not really giving up. So this, the $30 old psychological, right? It's a whole number, and it's also, it's a big deal for oil. $30, it's a big deal. So oil is always going to be hooked on the whole numbers and the medium numbers. The $30.50, they're all psychological in oil, just the same way they are in gold. Gold's the same. You're looking at 1600 or 1550, and you're going to see that if you go back in time and if you look at where the pivots are forming, even if it doesn't have any prior resistance, gold or oil is going to try to find support or resistance at these medium numbers or the whole number or the whole numbers.
Right.
Mm-hmm.
And then you find that happening pretty frequently?
Yes, very frequent. Yes. Yeah. It's very common for oil and gold to hook up into these numbers. They love the whole numbers, just like, because you're a stock trader. I was day trading stocks. This is how I got into trading. So I was trading stocks for about 12 years. And then I decided, you know what? I just want to find an easy way, like not to scan it. I didn't want to do all the hard work that you do, Jeremy. I mean, it's a lot of work. And, I just hopped into this room, like, I think it was like 5 minutes earlier.
Yeah.
Oh my God, it's so awesome to be part of a trading room.
It is. It's always so fun.
It is, like, to have someone, just talk you through the trades, tell you what he's doing. I mean, it builds so much confidence. It's so much better to be trading in, with someone that is knowing what what he's doing, obviously. So it's really, really awesome.
Yeah. Well, first of all, I appreciate that immensely. And what I want to ask you, Anka, is how long would you say it took you to get it? Because a lot of people, they ask me that question, like, how long was your journey before you're like, you know what, I can actually do this?
Okay. I'm going to let you in.
Let me in.
Okay. I'm going to let you in on something that I don't really, say it out loud all the time. But here's the thing. I think it took me about 3 years.
Yep.
And I'm not kidding you. So I was just making money into those 3 years. So here's how it started. I started and I was making money. I was trading with very small size, like literally very, very small size. And I was trading stocks. I had my trading universe. I think I had about 50 to 100 stocks that I would go to every single day. I mean, you can imagine when back in the day when, RIM was a stock that was trading like Apple, BlackBerry. I was going to say blueberry.
Yeah. Good old BlackBerry.
Oh my God. BlackBerry was trading like RIM. I mean, it was trading like RIM was the ticker symbol, but it was trading like Apple.
Research
like
in motion.
Literally. It was like really, really awesome stock to trade. So basically, yeah, exactly. Look, BlackBerry. Yeah. So I forgot where I was going with this, with the BlackBerry.
Well, you're just mentioning you were trading it like that was something happened when you were
trading. Yeah. So I wanted to simplify. Yeah. So how I got into this. So I was trading stocks, and then I decided that at one point in time, like I don't want to do all the work. So what I did was I started looking at the futures indices. And I found that because basically what is the one common denominator that everybody does when you're trading stocks? You always look at the market conditions. You look at the Qs, the SPYs, the diamonds, right? And you try to find, support resistance in those indices. And then based on those indices, you're scanning through your stocks and you're trying to find relative strength stocks. Why? To go long. Why are you wanting to have those relative strength stocks? Well, because you want to make money fast, right? You don't want to be a sitting duck in a stock. So you want to get in, and when you want your stock to achieve target, and you want to exit. That's in and out, and that's it. You don't want to pick a relative weak stock in a strong market because it's going to have a really hard time falling. So you don't want to short something that is weak, but in a strong market context. You want to go with a stock that is outperforming, let's say NASDAQ, that is outperforming the Qs, or a stock that is really weak and is in a weak market environment. Let's say, you're having a very weak Dow and you're having very weak, SPYs. You want to pick something, you want to pick financial, you want to pick something that is really weak. Let's say if financials are weak within that market, right, within that index, you want to pick something that is super weak to accelerate lower. And this is what happened right now. So stocks are really weak, like Boeing, for instance, right? We had a relative weakness in the Dow, and Boeing was super weak. We know all the stories around Boeing, and now with the airlines and everything, I mean, this was poised to plummet. Of course, you want to pick stocks like Boeing to short, and you don't want to pick stocks like Apple, right? Or AMD that are holding right now like a champ. I mean, these two stocks, like Apple, not only two, but like Apple, the Google, the Nvidias, Baba, Microsoft, these are the stocks that I have on my watch list now for a potential run up. If the market is going to start rotating, it's going to start pushing higher. These are my go-to stocks for swings long, right? Or even for an active investing position, for, let's say for the next 3 months, 6 months, etc.
Right. So how do you know in this situation, a lot of the questions I get, how do you know if a stock is bottoming?
Okay, well, I have to see a clear sign of bottoming. I
Okay.
assume that that red line that you have there, that is the 200 SMA. And
Yep. You're
Jeremy,
correct.
this is just funny because I'm using the same colors.
Nah,
Okay.
I love it. I love it.
I'm telling you. So is the blue line the 20 SMA?
Blue line's actually the 100. That's the 100 SMA.
Oh, is the 100?
Yep.
Okay, okay, here's the difference. I have the 20 SMA with blue and I have the 200 with red. So the
Nice.
more I see that, that Apple going into that 200 SMA, for me, 200 SMA is is the daddy of all moving averages.
Mm-hmm.
And I really like to see kind of like a pull into that moving average. Sometimes you're getting that slingshot because it just comes back a little bit more through that 200 SMA. And the first thing that I'm watching, go to the 4-hour if you can. Go
Sure.
to the 4-hour, because this is how I am identifying the area close or closer to the 200 simple moving average or to the 50. Those are my two favorite things. And then I'm looking for a 4-hour reversal. Okay. I don't know if
Mm-hmm.
that was your order or my
That
order.
was me. Sorry.
Okay.
I keep forgetting to mute that.
Okay, me too. I was looking and said, oh, okay, the volume is on. So I don't know if that was your order or mine. Okay, but I'm looking for a 4-hour reversal. So what that means is that I'm looking at the prior 4-hour bar and I'm looking at this 4-hour to trade above the prior 4-hour and then start going for the gap fill. So that would be my first target for the gap fill. And that would be, let's say I would add a very small lot there, nothing significant, but I would start building a position on the 4-hour reversal. And then if I see that as it's going into resistance, it has that turbulence that it's not able to sustain that level and push higher, I'm raising my stop so I don't lose anything on those small gains from that 4-hour reversal. And I lift my stop either to break even territory so I don't lose anything, or even a little bit higher. Sometimes I let it in, I leave it in, let's say for a little swing. But sometimes, with these market moves, you're getting swing targets in like a couple of hours, which is insane.
Mm-hmm. Mm-hmm.
Exactly. So I would initiate the trade on a 4-hour reversal. And then if into the next day, I would get the price that would trade above today's high, I would add one more lot.
Got it. I love it. So here's
Mm-hmm.
a tough question for you, Anka. If you had someone who's just starting out,
Mm-hmm.
what market would you suggest they start trading in?
Well, I think it depends on personal preference. I started with stocks. I love trading stocks. Love
Yep.
trading stocks. The only reason why I'm not trading stocks right now because I got a little bit lazy. Okay.
Yeah.
I mean,
Fair.
literally, this is the reality. But if you would like to trade, if you want, I would recommend, trade stocks and futures. You're already analyzing the Qs and the SPY. So it's not a big deal if you're looking at the EMoney S&P or NASDAQ or even the EMoney Dow. It's the same thing. You're seeing the same patterns with the same indicators. If you're using indicators, you're seeing the same candles. Everything is carbon copied. It's not a big difference.
Mm-hmm.
So I think that if you want to do a little bit the extra work, you can definitely go into stocks. I love trading stocks. In fact, when I swing trade, and I'm completely flat right now in swing trading. I don't have any trades on. A lot of things that are on my watch, but I don't have anything active right now. But I typically am very active in swing trading, and I usually have 10, 15, even 20 positions on. Not every day, but on, let's say, in a period of time. And then I ease out of the trades depending on the context, because if you're having that massive bullish, environment, all you have to do is raise the stops, and look for other opportunities that you're going to hop in, some late bloomers in stocks. one market that I would stay away from, and I have traded that as well, is the Forex market. Not a fan of the Forex market. Like I said, if you want to trade individual currencies, there are some opportunities there through futures. You have way better tax advantages. And this is one other reason why I gravitated towards futures trading, is because the more money you make and the more you trade, you're going to pay a bit more taxes, but hey, that's a really nice problem to have,
Sure.
And for tax purposes, that's one of the reasons why I'm actively day trading futures, because I have smaller taxes, and you get tax benefits if you're a futures trader. You get to deduct a lot of things, computers, etc. So you could talk to your accountant about that, your CPA about that.
Right. Which makes tons of sense. Yeah.
Mm-hmm.
So give me just, I like asking this question, but give me your general viewpoints and thoughts. What are we doing from here on the market?
That's a very interesting. I think we have to take it one day at a time.
Yeah.
And I think that day trading and day traders have a huge advantage over investors and day traders right now, because we can take advantage of smaller moves in the market with more accuracy than swing trading, because short-term trading is much more predictive right now than longer-term trading. I think everybody is fearful of what's happening, worldwide. We saw President Trump last night, and basically, he is not going to allow any not only tourists.
Yep.
Yeah, exactly. Yeah, all flights from Europe have been banned. So I think that's a great thing, because we're trying to contain this. I think that once this scare is going to fade, I hopefully think it's going to fade soon, we're probably going to see the market reverse. I'm looking at, for me, looking at the SPX or EMoney S&P is a great part of the process. I think it's a better representation of the market being, having 500 stocks under it. And I think that right now we're still respecting the major trend on the monthly chart, major trend on the weekly chart. So we're still holding very solidly into these two higher time frames, and we're at very interesting locations. We still have the opportunity to make a higher low, even on the monthly chart, if we should reverse right around into this area without taking out the prior low in the SPX into the 2300, around the 2300, I think it was.
Sure.
So I still think that longer term, we are still in bullish territory. We've visited the 200 SMA into the weekly chart. So I think that now is the decision point. We are looking oversold, and we have been into this oversold area for some time. But I still think, on the other side, that we still have a strong economy. Nothing has changed, but a bit of a slowdown. I think the tech companies are a safe haven right now. A lot of their employees are already working from home. I saw some tweets this morning. Twitter is advising all their employees to work from home. I mean, Facebook, I think it's just a matter of time before they're going to do the same. Google, likewise. And we have, a lot of applications where we can work from home. And I think that we should take advantage of this, like Zoom, right? I was looking today at Zoom ZM that has a daily rotation, is trying to move a little bit higher. HP computers are going to be on high demand. And obviously, if computers are going to be on high demand, and in fact, Goldman Sachs this morning just upgraded Hewlett Packard. Okay.
Yeah.
So Hewlett Packard, again, upgraded. What goes into Hewlett Packard, where it goes a little bit of NVIDIA, goes a little bit of AMD, right? So that's why these stocks are holding. So computers are going to be on demand right now. These are, again, stocks like Work, ZM, online applications, all these things are going to be like, on really high demand moving forward. And I think that this is something that, I am going to definitely take this into consideration. And because you asked me, what I think about this market, I think I need to see a bottom. I need to see at least a daily reversal, and hold daily, or what I would love right now, and especially when we get these big flushes, is that inside bar.
Yeah.
I would love to see an inside bar. So flush today and tomorrow. Let's see if this low is going to hold today. And then let's see if we're going to get an inside bar. If we see an inside bar, then we have a strong chance of a reversal. But now, I mean, I'm seeing the market bleeding again. Carnival halts, print this line. I'm just looking at CNBC right now. So the context is not really favorable for, in my opinion, for any, long terms. I mean, I know, Jeremy, you're doing options, and I think this is the safer way to do it because you're limiting your risk. I don't do options, but definitely, limiting your risk is a big thing. Right. And you could actually make a lot of money with options. Like I said, I don't do options. I sometimes, once in a blue moon, I do options. It's not my everyday thing. But I think that maybe options are a little bit safer. But in my personal opinion, like something like totally short term.
Yeah.
And and don't forget that futures are going to expire tonight, right? So we're having the new contract that is setting in. Usually when the futures market, I'm sorry, they don't expire, they roll over. Okay. Yes. They expire next Friday. Sorry about that. So they expire next Friday. Next Friday, we have quadruple witching option expiration, which is going to be a big doozy with this market. I have no idea where they're going to pinpoint prices. Yeah. I think that, typically what you were expecting into the roll, because the futures contracts are going to roll. When they roll, you're going to have two things that are going to happen. First off, there are going to be two contracts that are going to be tradable into next Friday. So the volume is going to decide. You're going to see the volume fade from March going a little bit into the June contract. So as we're getting closer to expiration, it's going to be kind of like a 50-50. 50% of the traders are going to still going to be trading the March contract. 50% are going to be trading the June contract. So you're not going to get that big flow, big volume into the futures market. And typically 3 days before the roll, futures are very jittery, and 3 days after, and then going into, and especially now we're having the quadruple witching option expiration.
Yeah.
Which is going to be interesting.
You're 100% correct. It's going to get a little nuts out there. Anka, thank you so much. So again, for anyone who's listening or watching, tradeoutloud.com. That is your website. You've had that website for how long? How'd you come up with that name?
Oh my gosh. We are literally working on getting a new website. We've had our website since 2010. Actually, it was September 2010. And nice. And we went live in January 2011. But it's just cool. Crazy.
Yeah, very, very cool. And again, here's your Twitter. I do follow you on Twitter. We followed each other for a while. And I know you've had an event that I will hopefully get a chance to be a part of at some point in the future later down the road. But I know your event's coming up. When is it going to be in April this time?
We canceled the event. The event due to the corona. Yes. Here's the thing. In Boca Raton, where I'm at right now, a lot of the hotels, resorts are canceling all the events. So for instance, there was the big futures event, the FIA Futures International Association. They have an yearly massive event at Waldorf Astoria here. And it's like a huge event, like millions of dollars poured into that event with fireworks. It's like kind of like a 3-4 day event, and traders from like institutional traders from around the world gathered there. So it's a huge event. They canceled it, and a lot of weddings, whatever, everything was pretty much canceled here.
Man, that's what's so wild. Well, sorry about that, because I know that you probably had to.
We're gonna probably do it this fall, Jeremy. I'll let you know.
Okay, cool. Yeah, keep me posted. Keep me posted. But again, ladies and gentlemen, if you're watching or listening, feel free to follow Anka Trade Out Loud on Twitter. Again, here's her website. I just want to say thank you so much for being here. Thank you for your expertise. And I appreciate you just being a nice, real voice out there in the community for traders and always willing to help people. So thank you.
Likewise. Thank you so much, Jeremy. And again, stay safe in the market and not only. So thanks so much, guys.
Yes. Thank you so much. You rock. Have a great day.
Thanks. Bye.
Yep. All right, folks. Well, there she is, Anka Metcalf, phenomenal futures trader. If you trade futures, you got to pick her brain. You got to listen to her. I mean, she spent a lot of time looking at the charts and studying price action. I will go over this really quick. Just again, my general viewpoints on what just happened in the market. I feel like we've seen this before, and what I'm looking at is the price right here of the halt last night of futures. So we had the limit down, right? We broke down, we rotate higher, we broke down, we had a massive flash up, and then we kind of more or less immediately crashed. Well, the interesting thing is I feel like that exact same thing happened just a few days ago, AKA on Monday. So you had, right, the halt, we gapped down, had a huge rally, made a higher high, crashed all the way back down, bounced all the way back up again, and then rotated back down. I think we're going to get something very similar to that. So I think we just had a little bit of a spike. I think we're going to get some repetition, and I'm going to be watching to close out of some of the puts that I bought if we make some new lows, and I'll hold on to some puts if we make some new lows. And then if we trade higher tomorrow, or we make some type of retest tomorrow, I think that's the price where I'll be looking to most likely add to some of my shorts, as it just seems like we're going to have a little bit lower to go before max pain is really, really here. Just a little bit, but you do have a high wave indecision candle. Again, tomorrow we probably have a little bit of a gap up resting day, and then maybe one more bad day on Monday where we gap down and then finally get to fade higher. We'll see. Of course, at this point, it's all conjecture, but watching closely, doing our absolute best to mitigate risk. Folks, for tuning in, thank you for being here. For those of you who traded with me all day long, thank you for making history with me. I appreciate it. Folks and friends from around the world, you are incredible. I appreciate each and every one of you. And until next time, love life, live life, and trade it. You guys rock. Bye.